All right, folks, I have to ask this man a question. Last week saw some crazy moves. We saw the 10-year collapse, the 2-year collapse, Bitcoin explode higher. We saw oil collapse. We saw banks go down, like, some banks go down 30, 40%. We saw Credit Suisse. We saw all kinds of craziness. And in the face of that, the NASDAQ was up roughly 5%. I do not understand. NASDAQ is supposed to be rate sensitive. We are extracting liquidity from the system. Yes, the 10-year is down, but do we really think liquidity was not drained from the system? What's going on, Dan? I can't explain it. I'm perplexed.
So why do you think that would be? So you're right. The NASDAQ and growth stocks and technology stocks are rate sensitive.
They're the most rate sensitive.
They're the most rate sensitive. That's right. Also, as I've been teaching on this channel for quite a while, the market is 6 to 9 months ahead. Mm-hmm. So what is the market telling us?
So I think there's two things. I think I know where you're leading me, but I'm going to go to mine first. I believe what's happened last week is the retail traders believe that the money printer's been turned on. It goes burr. I believe they are revisiting March of 2020 and the V-shaped recovery. I believe they are using the wrong playbook. So I believe with rates falling, the 10-year, for example, the 2-year, the yield curve becoming less steep, they're going, great, the Fed's going to come to the rescue. They're going to bail out the market. So I'm going to go buy all those stupid meme stocks and unprofitable companies. That's what I think happened. What you're leading me to is the Fed's going to cut, which I don't believe, at least not in the next 6 months. So I believe it's one, but it could be two. But that's what I think is going on.
Yeah, we talked about this on the last session, and I said summer cuts will come this
which
summer.
Is not even 6 months. That's 3 months.
Yeah, that's right.
Yeah, I'll put $1 on that. They're not cutting by July, I don't think.
Okay,
but
we'll see.
Hey,
hopefully we'll still be doing this in July. Well, we can talk about it.
I will be doing it in July. I'll still be doing it.
All right, let me share and show you some things. So one thing about being in the market is you don't ever want to anticipate what's going to happen. You want to be a trend follower. Mm-hmm. You don't want to anticipate the trend, right? So it's important to understand what the rotation looks like. By the way, anybody that wants my newsletter, I went here for a specific slide, but since we're on this one, just send me an email to breakpointtrading@gmail.com and I'll add you to the list. But this is the one I really want to talk about. This is a 1-week view of the sectors. And I'll go into this here in a second, and we'll look at other views. We'll look at a 1-month view too.
Yeah, look at energy. Woo! Wow.
Yeah, energy fell off a cliff. But the important thing is, as I've been talking about, the three up here, now utilities is up here too. And utilities is it is not an aggressive sector.
No.
It is a conservative sector.
But it's a yield sector.
But it's a yield, and it's a dividend, high dividend sector.
Correct.
And also, interestingly, March is the best month for utilities historically.
No idea.
So March has always been the best for utilities. But the other three that are in this are technology, communications, which is where the internet stocks are, and consumer discretionary, which the number one component of discretionary is Tesla. Okay. Why the heck would this be? These and they pretty handily outperform.
Yeah.
5%. Communications and technology up 5% in 1 week. Just like you were saying. So
I believe the answer is people are incorrectly assuming we're going to repeat the pattern from March of 2020. You're saying they're buying ahead and we're going to get some rate cuts.
Right.
Maybe it's both. I don't know.
Maybe it's both. Let me make this a little bigger. So this is the 1 week. That's the one I just showed you. Let's look at 1 month.
Ooh, okay. Oh, the only thing up is tech.
The only thing up is technology for a month.
So that would be again. This is a month to date, so that would be back to February 18th ish, 19th.
Correct.
Okay.
Right. Now, when we go back 3 months, I don't expect technology to stay up there. Oh, but it is.
Wow.
Technology and communications and consumer discretionary. Look at the three that are outperforming.
Why then? Why?
For 3 months.
Why?
3 months. It's not just a 1 week thing.
So again, I go back to December. That's December, right? Or January. That'd be December 18th. So what this is saying is people have been calling for Fed rate cuts for much longer than was probably reasonable.
No, I don't think that's true.
Oh, wait a second. You can't have it both ways. You can't tell me the last month that because of this and now you can't. I don't. Come on.
Oh, but
how
I
does
can.
Yeah, but I can't. Okay. All right. Fine.
So we're gonna go over here and look at a weekly relative chart.
Okay.
This is relative to the S&P. Actually, let's look at a daily. Let's look at this on a daily basis. It's even more interesting. All right, so this is technology on a daily basis. Now, this is a relative chart. So this is technology versus the S&P.
Mm-hmm.
If it's going up, and focus on this pink line right here. Mm-hmm. If it's going up, that means it's outperforming the S&P.
Understood.
It's going down, it's underperforming. All right, so notice when it started to go up. It's in January.
Yep.
And it has continued. It has not even, it crossed over its moving average lines here, it went over the 200 right here in the beginning of February. And it's not even rolling over.
And you're telling me that's not because people were assuming rate cuts were coming?
That is correct. I
So growth. So wait a second. Time out. All
right.
You can only have stocks go up if a few things happen. One is rate cuts are coming. You already said no, you don't believe that. Then the other one's got to be earnings. You think earnings are getting better for tech stocks since January 9th?
We're going to find out in about 3 weeks or so.
So I think what you're saying is the market believes earnings are getting better. It could also be the multiple. Maybe the multiple got compressed. I mean, there's only a few levers you can pull. This is a crazy divergence.
The multiple gets compressed because the stocks drop. I mean, the technology stocks have fallen off a cliff. I mean, some of those were down 50, 60%. Right?
Oh, no, I totally agree. Okay. Interesting.
But they started to recover here in January, which is typical. January is usually a good time for tech stocks.
Okay.
But the acceleration, I think, is because of the banking crisis and the belief that the Fed is going to cut. So the belief that the Fed's going to cut has just added on to.
Okay. So you're saying the last leg, that last, I don't know, call it month, 5 weeks, has been because of Fed rate cut. Okay. If that's what
This is March. So this is basically 2 weeks, a little more than 2 weeks.
That's true. That's right. We're in March.
Right. So that's March.
I can buy that. Okay. I'll buy that.
All right. So we can look at communications. This is the internet stocks. You can see, again, they took off in January, as they often do. And then they started to pull back, which they often do in February. And then with the banking crisis, they started to take off.
Yeah, well, also because TikTok might be banned. Let's not forget that. That's an exogenous event.
I am not concerned about why this is happening. I'm just telling you what the chart is saying.
Totally understand.
I'm telling you what the market is telling us.
Understood.
And the rotation in the market is to growth areas. I haven't looked at this.
And again, that is because you think since March or in the last couple of weeks, the market is betting that rate cuts are coming, and they're coming soon, to your point, this summer.
Well, I think the market is betting that the Fed is going to pause. I think that's the first step.
Sure.
So which I agree with. Some of this in the last few weeks is because they expect the Fed to do a quarter point, but then talk about pausing.
Yeah, I could see that.
All right. So that's the first leg.
Okay.
When the Fed actually starts cutting in the summer, the market will explode.
Okay. And just so we put a month on it, you think July is before July is a good number, or do you want August?
Let's see. July, June, July. I would say July. It might be even June.
Okay, so by the end of July, by July 31st, we
Yeah,
will have our
July.
first
July
rate cut.
is beginning of July is usually a bullish period.
Okay.
Right around the 4th of July, the
I
week
can't
before the 4th,
imagine. Yeah, yeah. Okay,
week
great.
before
I
the
can't
4th,
imagine
and
that, but
right
that would be
after it.
great. Perfect.
So this is one that I showed a while ago. I haven't looked at it lately, but this is the rotation chart. So what this is, for those that haven't seen it before, I'll just explain very quickly. If we go back and look at December, when the market hit its all-time high, December of 21, that is, when the market hit its all-time high right here, the rotation was out of growth. So this is, this first one is discretionary versus staples. Second one is the Q, NASDAQ versus the S&P. This one is the technology XLK versus the S&P, which I showed you a few minutes ago. This is Russell growth versus value. And the one at the bottom is the NASDAQ advanced decline line. So, and this is why I was bearish, if anyone was listening, last January, when we first started doing this. I was bearish because of this. In December, the market hit all-time highs, but at the same time, all of these growth and technology sectors were rotating lower. They were going lower as the market was heading higher. So retail traders thought that we were going to the moon, that it would never end, the market would always go up. But professionals were getting out because they knew the market was ready to go down. So they're getting out of growth stocks. Okay? That continued all the way to June. And this is why I was bearish for most of the year until June. June is where it bounced and headed back up, but we came back and did another bottom in October. So this dotted line right here, this green line is the low, the October low. So this is the all-time closing low. This is the close, right? The blue dotted line here is where that crosses. So I just crossed where that low was in October to see where these rotation sectors were. So consumer discretionary and staples, even though the market was going up, they were actually going down right up until January, which means the big traders, the Wall Street basically was rotating out of discretionary into staples, thinking that the market was going to have another leg lower, which it actually did right here in December. But as it started going higher, they started rotating back in again. They're still a little below this low point right here. But look at the NASDAQ versus the S&P and technology versus the S&P.
Just wow.
The rotation, this is what happens under the covers that retail traders never see.
Right.
This is the under the cover stuff. This is what the big boys in Wall Street are doing. They cannot take positions in one day or 1 week or even 1 month. It takes them months to get into a position. They have been entering these positions from the beginning of the year. And Russell growth versus value, it just broke out of that October low right here. And the advanced decline line actually never went below it. So this is the other reason why I'm saying the market wants to go higher. That doesn't mean that it will. If we break below this lower low that this dotted line is identifying right here, if we break below that, which we touched it last week, but if we get below it and we stay below it down here, and then we are very likely going back to the bottom at 3,500, and 3,200 will definitely be in play. That's what you have to watch for.
I want you to say that one more time. Say that again. I don't think people heard. Go ahead.
If we break below the December lows, so the market hit a low in October, it rallied, came back, hit another low, but it was higher than the October low.
Got it.
We started rallying again. So we rallied to a higher high. So here's a high. Here's a higher high. We still haven't broken this one over here, which is at 4,300. We'll talk about this hopefully at some point later in the year. We haven't broken about that, but this is a higher high. In order to keep this uptrend intact, we have to stay above this higher low.
Okay. We're flirting with it right now.
We are flirting with it now. We actually touched it with the banking crisis. Came down and touched it, and then we bounced off of it. That is the point to watch for.
Okay. I like
I
it.
put it in
clear and concise.
I put it in this chart right here. That's the 38.2 Fibonacci level. I put it right in that chart. I put it in this chart, 38.2 right there. That's what we have to stay above.
I love it.
If we close below that, then I will suddenly, magically, become a bear.
There you have it, folks. 3,800. 3,800 close. Let's be clear. Close, not intraday. Close, correct?
Close, and it needs to
Follow
confirm.
through.
It needs to confirm. Yeah, it needs to follow through, which means it needs to stay there for more than one day.
Gotcha.
Right.
I love
out of curiosity.
Like that.
This is the rotation chart.
Wow, look at that.
This is a weekly, 1 year weekly. This is kind of a cool chart.
Yeah.
So you can see energy, financials, staples,
and the dot is where it's at, and the
dot is where it's at right now,
and the other is where it started.
The trail is where it's come from, and this is a 10-week. The tail length is 10 weeks.
Oh, this is a fun chart.
That's a 10-week trail, so it tells you how things are rotating.
We should look at that more. Maybe next week, or I'm sorry, the week after, we can look at this in more detail. I think this would shock people.
Yeah. Now look at the three that I talked about before. Look at technology, communications, and discretionary. All coming from the lagging quadrant. Two of the three are now in the leading quadrant, and discretionary is heading there quickly.
It's heading there, yeah. Very cool. Well, do me a favor. I got to get ready for my next call. Please shoot your newsletter one more time. We wish you well next week. We do hope we get the midweek update, but we understand if you can't do it.
Yeah, if I can, I will. I'm not sure where I'm going to be. I could be on the road, or could be, I don't know. I don't know.
Looks like we lost your sound just a little bit. I'm going to just read this for you folks. Go to breakpointtrading@gmail.com. Get on the list. Again, it's one of these newsletters you got to keep. You got to read every week because you'll learn through repetition over time. Dan, thank you so much.
All right. Thank you.
Oh, now you're back.